is time for our weekly financial forecast, and we're joined by Tim Fitzwilliams from Fitzwilliams Financial. And we are 2 months into 2026, so it's always good to have you.
Thank you.
We're looking at the stock market. So how do you grade the performance so far?
Yeah, so Janet, I think that we've had a pretty good start to the year.
Oh, yeah.
Absolutely.
Yeah, pretty good. So as far as what you can see, does it look like we're going to continue in that direction?
Yeah, so it feels real that we're going to have a good year and good performance. But remember, there's always volatility, right? And how much of that is going to affect the portfolio depends on a lot of different things. So anytime there's emotion, there can be volatility. And right now, the big talk is AI disruption. I'm going to lose my job due to AI. And generally, we say, not really, right? There can be some loss. There can be some changes. But it's not going to be like some scary overnight takeover that people are concerned about. And that really is an emotional concern that we're seeing that people have right now.
Now, when you think about volatility in the stock market, people who are about ready to retire, they always get concerned about that because they're thinking, I don't want anything to happen, and all of a sudden I lose everything that I've been saving all these years. What is your advice for someone who might be retiring soon?
Absolutely. And the reason people are concerned is because of a mathematical principle called the sequence of returns.
Right.
Which says as there's a sequence of numbers based on where the volatility is, you might have less. So if you're about to retire or planning to retire real soon, now is the time to act, to look at things. So just like we talked about in last week's segment, so that you can lose less to make more. And as a retiree, that money is sitting there. You're not putting into your 401 or your IRA or TSP or alphabet soup, whatever it may be called, right? You're not putting into that anymore after you retire. So those bumps in the road, those little bumps of volatility that normally you wouldn't even worry about could have an effect.
Yeah.
So we think it's really important to strategize and get with a financial advisor, a fiduciary, and start looking at things so that you understand your risk tolerance and how your portfolio is going to respond to volatility in the market.
Yeah, so if you're about to retire, you probably should have already done that by now.
It is important to do that. Not everyone does that, right? But it's never too late to start doing that because we've had some good runs in the market. So it's okay to start late. It's okay to start looking at things and start calculating volatility. And again, when you retire, your mindset shifts. So now it's about coming down the mountain instead of going up the mountain. And that's a whole different set of tools and skills to be able to come down the mountain safely when you're trying to retire.
Yeah, because you need something to hold on to.
Absolutely, that's right.
All right, and interest rates. So are we going to be seeing a cut, you think, in the first quarter?
So we think after the new Fed chair is put in and their role has been established, then we feel that we're still probably going to anticipate about 2 more cuts this year.
All right, 2 more cuts this year. All right, well, thank you so much. We appreciate it.
Thank you.
And again, the financial forecast airs every Tuesday in our 4 p.m. news. If you have questions you want answered, email us at financialforecast@13newsnow.com.